You need to stop adding more indicators to your chart right now. See, most traders spend years jumping from the famous RSI to MACD indicator, from volume trading techniques to the next holy grail whatever indicator, only to end up exactly where they started. So you might be wondering why that keeps happening almost all the time. Simple, because indicators don't tell you what's happening, they tell you what was happening. And if you don't understand what the chart is actually saying, every indicator becomes just another distraction on your screen. So today, I'm going to show you a trading strategy built around just 2 candles that can significantly improve how you read the market. Whether you trade stocks, Forex, or even cryptocurrency, it doesn't matter. Once you learn how to spot them, you may start seeing opportunities so many traders often miss. So watch till the end, because this might completely turn out to be one of the most important price action techniques you have ever learned. See, the market leaves clues and footprints all the time, but most traders completely ignore them. What about this one candle? It is hard to ignore once you know what it is telling you. It is called a shooting star or a pin bar, depending on the price action context. A shooting star has a very small body, and one of the shadows is too long, probably 3 times larger than the body. Knowing this, I'm gonna show you the correct way to potentially trade that candle. No indicators, no fluff, just pure price action. And no, this isn't something you've likely heard of from some random video on YouTube. So stick with me, because this is where the things get really interesting. So starting with the Bullish Shooting Star candle. After a downtrend, a shooting star might show up at the end of the trend with a small body and a long shadow. The color of the candle is not important, it could be red or blue. After this candle, there should also be a bullish candle, which is actually a confirmation for the shooting star, and it is what we need for the setup. Given all this, the entry point into a potential long position is the 50% or the half of the confirmation candle. You can identify it just by looking at the candle, or if you want to be precise, you can apply a Fibonacci retracement. 0.5 level would be the half of the confirmation candle. So I identify it with a line. If candles move towards that line, it would be a potential entry into a long position. The stop loss would be right below the confirmation candle. Let's see that on a price chart. As you can see, after a downtrend, there was a shooting star candle, a small body and a long lower shadow, which makes it a standard one. Right after that, there was a bullish green candle, which is a confirmation for the reversal indication of the shooting star. I apply Fibonacci on the confirmation candle to spot its half. Then I place a buy order at that level, and in this example, the candles hit the entry and immediately move up. But right now, you might be asking yourself a question, and that is, why do we need to identify the 50% of the confirmation candle to use as an entry point? Why not just enter on the confirmation candle itself? Now that seems to be a fair question to ask. But no, the midpoint of the confirmation candle that appears after a shooting star or a pin bar could also be valid in the future. In other words, it is a very important order block if you are interested in smart money concepts. In this chart, there is a shooting star, along with a bullish confirmation candle. So I apply Fibonacci to spot its midpoint. And as you can see, candles start moving up sharply without touching 0.5 level. I identify it with a line for possible future trades. After a strong uptrend, the candles once again return towards that level and form another pin bar, or to be precise, an indecision candle. So this retracement gives a potential entry opportunity into a long position. And remember, this advanced setup was just formed because of this small shooting star candle. This takes us into our next step, which is trading bearish shooting star candles. A bearish shooting star may appear at the end of an uptrend. It has a very small body and a relatively long upper shadow, and once again, the color of the candle is not important. Also, there has to be a confirmation candle right after the shooting star. We need to identify its midpoint to place a sell order. You can either identify the midpoint approximately or use Fibonacci retracement if you want to be precise. So I identify the level with a straight line. When candles return to this level, this might just be a good spot for potential short position. And once again, the stop loss should be placed above the confirmation candle. At the end of an uptrend, there is a shooting star candle, which has a very small body and a long upper shadow. And right after that, there is a red confirmation candle. I apply Fibonacci on this candle to precisely identify its midpoint. Then I place a sell order for a possible short trading opportunity. So, shooting stars may provide valuable insights about market conditions and could provide potential trading opportunities right after the candle or in the future. However, like any trading approach, false indications can occur, which is why risk management and proper position sizing remain essential. So if you think this is new, just wait until I show you the next candlestick pattern, because honestly, I haven't seen anybody talking about this one. I came across this pattern after years of studying price action, and I've named this one Indecision Clusters. From time to time, you may see 3 or more pin bars and shooting stars appearing side by side in a trend. So many traders just ignore them. However, they can often act as significant order block areas in Forex and stock markets. Besides, from my experience, some traders interpret these formations as sign of increased institutional activity, although there is no way to know exactly who is behind these orders. Right after you spot such an indecision cluster, there is a confirmation candle that can provide trading opportunities. But before we dive into the main point, if you think this tutorial was helpful so far and you have learned something new, just take 5 seconds of your day and hit that like button. And also, feel free to subscribe into our channel, because we've got plenty of videos just like this one to help you improve as a trader. Starting with the bullish ones. Imagine an uptrend with a bullish rally, and finally an exhaustion or a correction to that rally. Somewhere in that corrective move, you can possibly find at least 3 almost identical candles standing side by side. Their color is not important. They could be bullish candles or bearish ones. These candles could be 3 pin bars or 3 shooting stars, 3 indecision candles, or even combination of these. So it doesn't matter. The concept would be the same for all these formations. After the cluster, there is a confirmation candle with a strong body that literally engulfs the cluster. Again, its color is not an issue. It just needs to have a relatively big body. The first thing I do is that I mark the highest point of that red candle, which could also be the start or the open of the candle, and that point may provide a potential long position opportunity. So after the confirmation, candles move higher and above that line. It may lead to a brand new uptrend. In this chart, after an uptrend and a corrective move, 3 identical bullish shooting star candles appear and form a cluster. After that, there is a red confirmation candle which has almost engulfed the entire cluster, so traders would expect the price to move further down. But what we do here is identifying the open or the highest point of this red candle. As you can see, price starts moving down and then push higher and break above that line. The interesting part is that there is also a pullback right after the breakout, and that pullback could just be a potential point for a long opportunity. So I start a position. I set my stop loss below that line and aim for a risk-to-reward ratio of around 2. Let me show you the bearish version of the indecision cluster and add some new trading concepts and take it to a higher level. After a downtrend and a corrective move, you might find an indecision cluster. Again, 3 pin bars, 3 shooting stars, indecision candles, or even combination of these formations. Right after that, a strong body confirmation candle appears which almost engulfs the entire cluster. And again, it could be a bullish candle or a bearish one. It doesn't really matter. I identify the open or the highest point of this candle. A breakout from this line could be a potential long position opportunity. And if there is any rejection or resistance from that line, it would be a short position opportunity. This is the new point I was talking about moments ago. So briefly, if candles move higher and break this line, they could be a potential long. And if they move up and get rejected from that line, a potential short. In this chart, after a downtrend, 3 pin bars appear at the end of the corrective move. and right after that cluster there was a bearish candle, which changes the market character, and from there candles start moving down sharply. I identify the highest point of this candle with a straight line to wait for a possible trading opportunity in the future. Candles move forward, and as you can see, after a while, the price has pushed higher and returned to that level, facing resistance. One huge red candle has shown up, so this rejection could have been a potential short opportunity. And as you can see, it was a strong order block and the candles moved sharply down in our direction. And all this came from an indecision cluster. If you want to use these two candlestick patterns more effectively and take your trading style to a higher level, you should be able to identify the trend direction carefully. For example, in this chart, after this shooting star, I can channelize the trend in order to take a reversal trade. A breakout from the channel could be a potential entry into a long position. So if you're interested in fulfilling this tutorial, I've already got you covered with a channel trading strategy video, but not just a normal channel, the one that I haven't personally seen anybody knows about. It can identify potential reversal zones or trend continuations and even helps avoid fake breakouts. I'll leave a link in the description below if you want to check it out. Before you go, I have to tell you, this video is for educational and informational purposes only and should not be considered financial, investment, or trading advice. Always conduct your own research and consult a qualified financial professional before making investment decisions.